Hi there, everyone, and welcome back to the Ask Andrew podcast. Once again, we're joined by Andrew Sleigh to ask him questions from our viewers. Welcome back, Andrew. Thank you once again for joining us.
Great, Kellen. Good to be back. Thank you very much for hosting again in short notice.
Of course. I'm more than happy to do so. We have a couple pretty good questions here on the plate, so why don't we dive right in? In its latest price forecast, Société Générale reiterated its call for gold prices to push above $4,000 an ounce next year. The Dutch bank also shares this projection for 2026. Additionally, Société Générale sees gold prices averaging $4,065 USD an ounce in the second quarter of 2026. In your view, what is the likelihood of this coming to fruition?
I think we're going to possibly do that before the end of this year, easily. Maybe before the end of October. So at the current pace, I mean, it's a ridiculous forecast to go out 4 or 5 months and have it be barely $200 above where it is now. We've done $200 in the last couple of weeks, if not less. So it's completely, the banks, in cahoots with the government, do not want to admit what gold is doing. They don't want to bring attention to it. So they don't want to say anything like gold's going to be, $5,000 by the end of the year or whatever the number is, because then they have their investors saying, well, why aren't we doing that? Why aren't we buying gold? And the government, the banks don't want us buying gold. So they're never going to put a limelight like that on there, a spotlight. So that's just par for the course. They always only, inch by inch give a couple $100 above, a forecast, and they keep readjusting themselves. And it's ridiculous. They're just talking heads. So it's ridiculous.
You highlighted something very interesting to me, and this is me asking you a question now, about our banks and our government not wanting us to buy gold. Now, we do know that the Bank of Canada did actually release, we don't have any gold holdings. We don't have any physical gold holdings. We got rid of them in a substitution for bonds. I believe it was back in the 80s or 90s.
First term of Trudeau, last 200 tons.
Really? That was the last? Yeah. Okay. I was under the impression that it was, we were already out of gold holdings prior to Trudeau. But with that being said, how do you feel like this has impacted Canadians for these geopolitical events coming up in the future that we can all foresee, especially with countries like China, India, drastically increasing their gold reserves?
Well, we'll have nothing to back a currency when we urgently will have to in the future. So therefore, our currency will just die on the vine.
Okay.
And unfortunately with that, when the currency just completely implodes, then everyone who's been saving their dollars, saving their world, their life's work in savings in dollars, whatever it's in, stocks, bonds, mutual funds, whatever, those dollars all become worthless. So therefore they lose all their wealth. And, it's really bad news that we're not going to be able to back a currency with gold that we don't have. Now, I do believe eventually Canada, when it figures it out, will likely nationalize the gold mines in Canada. But that could be years and years away.
So we have seen a lot of Canadian, if our government, the Liberal government that's now been elected, they've been investing a lot back into Canada. Could you see that happening within this one term where, Mark Carney goes ahead and nationalizes Canadian gold mines or silver mines for that matter?
I don't know how much Carney is really putting back into the economy. He's a talking head as well. So he talks and says very little. So, like as far as spending, billions of dollars on this and billions of dollars on that, this is part of the craziness of how the governments of today are running the show. They're not investing in infrastructure. They're not investing in, oil and gas and all the stuff that builds a country. They want to send billions of dollars to Ukraine, or they want to spend $5 billion on Canadian military, which is in itself deceptive. They're not really going to spend $5 billion on the Canadian military because they don't have the personnel to even equip the ships and the submarines that they say they want to buy, which likely will never come to fruition. Again, that's speculation, but that's equal to Carney just saying that we're going to spend all this money and buy new ships or buy new planes. That doesn't, buying airplanes or buying ships doesn't grow the economy of Canada. So you need to have the expansion of small business in Canada. You need to have expansion of industry, raw resources in Canada. You need to have farmers being equipped to be able to expand and grow and prosper in our country. And all of the things that the governments have been doing worldwide for a decade or more have all been to discourage small business, farming. Everything is all about discouragement of that stuff. I mean, unemployment is raging and going to get much worse. Inflation will continue to go higher. That destroys businesses. So it's really going to be just the very biggest companies will exist in cahoots with the government.
Which we've already seen with companies like Loblaws.
Yeah. And so, there's no foreign investment going on in Canada. There's nothing but money leaving Canada.
Okay.
Like billions. So like if I was a trillionaire looking to invest in Canada, looking at the political landscape, I'd have to be nuts to invest in Canada.
Yeah, I can't argue with you there, especially even just comparing ourselves to our southern neighbors. There is a lot more red tape when it comes to not only just doing a business, but investing in said businesses for sure. So, moving on, according to official data from the International Monetary Fund, China bought 2.9 tons of gold in July. However, after reviewing British revenue and customs data, Société Générale said it suspects the Chinese central bank bought more than 14 tons. With China significantly increasing its gold reserves over the recent years, how big of a variance in China's precious metals holdings do you believe there to be? So, what they've reported versus what they actually have. Because we've seen it with regards to customs data versus what they report just within a month, and it's a massive variance there.
I think they're buying some stuff that doesn't get reported.
Okay.
So they're buying, dory bars directly from source, from non-LBMA approved mines or smelters or wherever they're getting it from. And some of that stuff doesn't go through official channels, is my understanding.
Can you expand on
I'm not
that?
an expert on that. Well, not very much, but for example, China's going over to Peru and buying directly from source, from non-LBMA, bringing silver slurry, I think is what they call it, whatever stage of refinement, back to China and then refining it all there. And none of it goes on the books anywhere. It doesn't have to be reported to a national stage anywhere on how much tonnage of silver they're taking out of Peru. So they could be doing something like that with, let's say going over to some mine in Africa that's not LBMA approved, so nothing's on the books, and buying tons and tons of gold and refining it to their own standards back in China. And nobody knows what they've got.
So if it's not LBMA approved, is it safe to say that the Central Bank of China doesn't need to report these purchases?
Oh, no, nobody's going to force the Chinese bank to report anything. And China's going to just look at you and say whatever they want.
Well, that's that's kind of the reality, right? When there's two players that can do that, it's really only China and the US. So that I agree, it makes total sense there.
And Russia. So
Russia too. Yes, I forgot about them. India also as well. They also have a pretty significant economic standing in the world. So I would say that they're starting to get to that threshold as well.
China has been long that they hold their cards extremely close to their chest, and they're not going to say what they're doing, and they'll say one thing and do another, and all that. So there's been a long estimation on how much gold China really has, and big, huge numbers. So they've been importing officially what's been known for a few years. I don't keep tabs on this because I don't have the time and resources to, and I just get this data from other people that are paying attention to this stuff. But for quite a while, they're importing 1,000 tons of gold a month.
Okay.
So, that's besides they're the largest producer in the world.
Really?
so like they're number one. We're number four in Canada. I forget who is second and third. I'm going to say Russia and the U.S. But so whatever they're producing locally, and then they're doing 1,000 tons, and you do that by 3 years. Well, there's 12,000 tons a year times 36,000 tons imported over a 3-year period, plus whatever they make. Like, who knows what they really have, but it's way more than the rest of the world.
Okay. So do you believe them officially they have the 8th biggest holdings of gold in the world? Do you believe them to be number 1?
Well, off the record, nothing would surprise me. And I would say if I was China trying to play their game, my goal would be the number 1 holder of gold in the world. They do the production, they do the importing. Does the U.S. even have ownership of what gold it has? No audits done for 60 or 70 years. Nothing but shenanigans. So, if I was a betting person, I would say who's going to come out on top in all of this is going to be the country that has the most gold, and I think China can prove it.
Okay.
So I think China is going to be the one that has the most gold.
Okay. So that actually segues me into my third question here, my third and final question. Swiss gold exports to the U.S. Fall 99% in August, but rise 353% to China after tariff shock. That was the headline of the article that a client had sent me. And then he pulled an excerpt from the article itself. According to a letter from the U.S. Customs and Border Protection dated July 31st, 1 kilogram and 100-ounce gold bars would be classified under a customs code that subjects them to costly tariffs, with Switzerland's 39% tariff among the highest the Trump administration has imposed. How does this... So that was the excerpt that he had sent me. And this is the question he had asked alongside. How does this impact the future of the American dollar, especially considering the turbulent geopolitical times? And we kind of already touched that basis point, but I'd like you to expand on that question specifically more.
So if I'm understanding it all, the tariffs on gold coming into the United States and how it affects the dollar, is that really the basis?
So basically, both kilogram and 100-ounce gold bars are going to be falling under a custom code that subjects them to tariffs, with Switzerland's 39% tariff being the highest. Yes, being the highest that the Trump administration has imposed. So we've seen a 99% drop of Swiss gold exports to the States.
Well, with gold, so basically it's resulting in whatever gold goes into the States going up in price.
Okay.
Right? It's being tariffed on the way in, is what I'm understanding what this is saying.
Correct. Yes.
Obviously
Yes.
the Swiss has lowered what they're sending, but there's the Chinese gold, whatever. Well, they don't export gold, but whatever other gold is coming in is being tariffed, which essentially makes the gold more expensive, which ultimately, in my opinion, will just devalue the dollar. It takes more dollars to buy the gold. And if gold is going to go up as a result of tariffs in the United States being such a large economy, then ultimately, what do you think is going to happen to the rest of the world with their gold prices?
Well, the rest of the world, I'd say their gold prices raise right there with it.
Yep. Like if it was just happening in let's say Vietnam, who would care? Yeah. Okay, and that's what's happening in Vietnam right now with they have the CBDC stablecoin, whatever, full launch mode testing ground in Vietnam. And the interviews I've seen out of Vietnam says the United States is next. So because it's in Vietnam, nobody cares. It's such a small economy. or if the bond market in Vietnam failed or something, like nobody would care. Um, so with gold going up 30-40% as a result of a tariff and edging prices up, then the world would respond with, globally prices would go up, which just means it's more dollars, whatever country you're in, to buy the same ounce of gold, which in essence, I guess, is devaluing the currency.
Okay. Okay. So you think regardless, even if it has nothing to do with China also seeing a rise of 353% of imports from Swiss gold, you think regardless, even just the drop of the Swiss exports to the US currency, that's even just then taking China out of the picture, that's going to be drastically impacting the price?
So did you say that the imports to China from Switzerland went up 300%?
Yes. So for
Well,
specifically
okay.
for gold, so US imports from Switzerland in August fell 99%, but rose
Yeah.
353% to China.
Oh, I see. Okay. I didn't quite understand that the first time around. So, well, that that tells you again, by policy of the administration in America, they want the gold to flow to China, not the United States.
Okay. And
So
why do you think that
the
is?
league, well, my sneaky suspicion is the society, the Council for Foreign Relations in the United States. Their their goal is to hollow out America and move manufacturing and prosperity to China. As odd as that sounds, like you can go on the website of the Council for Foreign Relations, of which many members of the United States government are on that, and their goal is to switch the powerhouse of economy from the United States to China. They're undermining their own nation they live in. It's crazy, absolutely crazy. But you can look it up. The Council for Foreign Relations. It's there. So unless I have the title wrong, but I couldn't believe it the first time I heard that a few years ago, and I just all these government members are all part of it, and they're undermining their own society, and it's like where's the treason and the sedition in all this? Like why aren't these being held to account? So I would say that's all part of that scheme. They're trying to bring the United States down to its knees, and they're trying to bring China into the next realm. Be the dollar of trade will be the next, the BRICS nation, yen, yuan, not yen, yuan, or the renminbi, whatever they want to use. And so that lines up with that theory that if you're trying to make the United States weaker, then the gold's not going to flow to America; it flows to China.
Well, speaking of the BRICS nations, there's been very few updates, especially comparing to last year and the year prior. Well, of the BRICS nations as a whole, have we heard anything on where exactly they wanted to move ahead, currency specific? So, did they make the decision that they were going to consolidate? Because I remember at one point it was they were in a heated debate within themselves.
There was lots of news. It seemed like every month or two or whatever we heard stuff about them, right? And it's been really quite a bit of crickets. I haven't heard too much. And so that tells me, that makes my hair stand up in the back of my neck, that they must be getting close to launching something. Because
Really?
generally speaking, you talk about it, years in advance, a year in advance, 6 months in advance, whatever, and then you stop talking about it.
Yeah, eventually you got to put it into fruition, let's say.
And then you just catch everybody by surprise, when they're ready to do that. And um, so but you're right. I mean, there's been very little news about updates with BRICS, and so to me, that's could be part of the tell that something's coming for them.
Okay. And where do you see them leaning? Do you think they do move ahead with consolidating the currency?
The BRICS nations currency, consolidating all the BRICS nations under one currency. Is that what you mean?
Yeah, and even not that if it consolidates all the currencies, but at least the major players on the geopolitical stance. So we could look at India, China, Russia as well, Saudi Arabia, of course.
Well, the basis of BRICS has long been that they want to trade in their own currencies.
Okay.
Use a basket of currencies. They want to trade in their own currencies. China was going to restrict all that, and they could use a standard. Um, um, there's been so little for so long. To be honest, I mean, everyone's rusty on what's going on with BRICS now. So I probably could have answered this better a year ago, but
100%. I completely understand. You just had brought up BRICS nations, and you piqued my
yeah.
interest now as well.
So for a while they were talking about trading with each other's currency, which they're doing now. Eventually they're going to have to come to a common denominator. I'm sure that they can use their own currency to trade into, and then use like a BRICS yuan, if you will, to send to another nation. But they're buying it in their own currency, kind of very similar to U.S. dollar trade now, where they do that basically the same for U.S. dollars. Um, I guess we're going to find out, Kellen.
Yeah, I only ask because it's a very interesting scenario, especially with China kind of being the de facto leader. With them being an exporter economy, like at least within the last 15 to 20 years, they haven't had to, for lack of a better term, care about the value of their currency. And we've highlighted that ourselves in the last couple episodes we've seen here. Even within the trading war, I saw a couple people highlight how once the trading war between the US and China really heated up, that the yuan took a hit. But then I saw other people highlighting where they can take that hit solely due to the fact that they are an exporter economy. It's not the same impact that it would have on an importer economy like that of Canada or the US.
When the West is the largest debtors around the world, and as you said, we're the importers, not the exporters. If somebody's going to drive their economy down to zero, to take their enemies down to zero as well, and you're the country that makes everything, and you have all the manufacturing, I think I'll bet my cards on the country that's making everything for everybody, rather than the country that has nothing to
Rather
offer.
than the country that owes everyone money.
Yeah. So it's going to be one heck of a storm. I had a point in there somewhere. I was going to talk about the with China. There's lots of news about things that are collapsing in China. It even seems to have had an uptick of banks going down and whatnot. And this month, China has dumped $25 billion in U.S. Treasuries.
Wow.
So that's they've brought that in an upward slant, uptick on a consistent basis now. So that's also a sign to look at regards to, if there's, I don't see China, going to war in any kinetic war, because they're not interested. It's the West that's only trying to drum up that story, in my opinion. They're just trying to grow the economy and move on with their lives, and they're not going to put up with the shenanigans of the Swift system punishment if you don't go along with what the U.S. wants. And so they cut people out, and the world doesn't want to have that anymore. So, they're going to continue to dump treasuries every month, to whatever number. And that's a sign where they're getting ready to do the rug pull on the United States. And, as they keep dumping and more countries start to dump their own treasuries, I think, hello, hyperinflation coming our way in the U.S. It's been talked about for a long time that when the world is ready to be off the dollar standard, the dollars will start flowing back to the U.S. This is probably I would say the biggest point of this whole interview right now is when the U.S. loses its position as the dollar of trade. I believe the numbers are 70% of all the currency the United States has ever created is offshore.
Wow.
Okay, like that's a big number, obviously, and I'm pretty close to that number. I maybe only off by a few percent. So once 70% is no longer needed, and 70% of all the currency created flows back to the United States, it'll be a Niagara Falls event of currency pouring into the U.S. borders, which will cause hyperinflation that might be a world record.
Yeah, to
worsens
the
them up.
hyperinflation to the utmost degree. I didn't realize that majority of U.S. dollars were actually out in circulation outside of the U.S. That is very big news to me, in all honesty.
Yeah. So that's been the way it's been for quite a long time because it's, the US dollar, like the petrodollar, right? Everyone has to buy oil in petrodollars, which is US dollars. And so the demand for US dollars around the world has been high for a very long time. And then you have um, US dollars being exported into countries for aid and for weapons and for war and for you name it. All that is exported currency. And then in the early years, U.S. was loaning countries money, so that's still currency being exported. And so yeah, it's been 70% for a long time. So that's a big number when you start talking about the hundreds of trillions of dollars in debt. That's a wash out there in the world,
Yeah,
and that starts to flow back.
it's a significant number to say the least. It's well, we do always end on positive notes here, I do find, but
We haven't actually talked about that one for a long time. I used to talk about that point quite a bit years ago, and it just, it has kind of just gotten lower on the tree on the limb, and so I'm glad I remembered it because I had not brought that up for quite a while, and we could be in that point where in the very near future we're going to see that unfold, and if it does, you don't want to hold any dollars, and that could be why, as we said in our last episode, that the American dollar is now worth 7/10 of a cent. Well, maybe that's got something to do with part of these 70% of all currency ever created is now already flowing back to America.
yeah.
so, so, if it continues to, maintain and accelerate in a slow fashion, hello, disaster. So don't hold American dollars.
Well, and
Any
that's why
dollars, just hold gold and silver.
that's why you have the options for gold and silver, right?
Yep. Yeah.
So,
The
Andrew,
only
that
safe haven asset.
I would say gold specifically the safest. So that is all the time we have today. Once again, it's been a pleasure speaking with you. I actually learned a few things here myself today. For our clients, how specifically can they reach you?
So you can send an email to deathofthedollar@sprottmoney.com. So deathofthedollar@sprottmoney.com. You can call the toll-free number, which will be somewhere on the bottom of the screen, and my extension is beside my name there at 2:30.
All right, perfect. Well, once again, Andrew, thank you very much for joining us. If there's anything else, please don't hesitate to flag anything. Any questions you want me to bring up to you our next interview, I'll be more than happy to do so.
All right. Sounds good, Kellen. Thank you very much. Have a good day.
Likewise.